Okay. Let's have a look at the wider markets, because that's what we're looking for. At the top of the hour, we'll get the data in just over a minute, so we're waiting for what the markets do, and then hopefully we'll see something that's that we can trade as a result of that. Hey, welcome back to you. Yeah, and welcome back to you, Miyako. Just waiting for the SPY to drop its data. And we'll be streaming the press conference live. Oh, there we go, there we go. So, 25 points. I was expecting a 25-point raise to be decent in the market, but look, it's raised 25 points. Fed raises key overnight interest rate by 29 basis points, 25 basis points. We'll see quite a bit of sell-off, I would imagine, right now. So recent indicators point to modest growth in spending and production. Job gains have been robust in recent months and unemployment rate has remained low. Inflation has eased somewhat but remains elevated. This is the FOMC conference. Russia's war against Ukraine is causing tremendous human and economic hardship and is contributing to elevated global uncertainty. The committee is highly attentive to inflation risks. I don't know about jamming, but we're doing what we can. The SPY. Huge sell-off now, a little bit of a bounce. I think we're going to remain bullish. I think once the conference starts at the bottom of the hour, I think we might get a move upwards, a move northwards towards going green on the day. Still just looking for something to trade on the small account, really. Still down. I've traded Peloton again, and I managed to get $150 back. So, I mean, small account, we're $500 down on the small account, but we're 6,000 up on the large account. So. Oh, we're selling off. Okay. I guess there's no respite. Well, we've had a good day on the main account. We're over goal. We got green. We're staying green. We got to goal and we got out. So we've locked the montage on the montage is locked on the main account. But this is the small account. Actually, if I move over to the main account, 6,000 up on the main account, 6,010. We were 4,800 at one stage. Gave a bit back with MGAM, and then Peloton came good for us. Got us green again. And over goal. So, yeah, in essence, I made a trade on the small account. Made 500 down on the small account. I went long and short on Peloton on the main account. Traded versus MGAM and Carvana. So the Fed removes references to COVID-19 pandemic and supply chain backups from its statement. And the Fed removes reference to Ukraine's war effect on inflation from the statement. The FOMC voting for monetary policy action. So Jerome Powell is the chair. This is the committee. John Williams, vice chair. Michael Barr. Yeah, he's another one who's had a charisma bypass. Christopher Waller. Well, to get into the Fed, do you have to be a complete grey matter? Only in the regular market. So there's no point placing a stop loss in pre-market or post-market. You just won't execute. Simply because it's a market. A stop loss is essentially a market order for the full position, or not necessarily the full position, but whatever the position is that you've got on the order. So it's a market order to say, get me out at the best available price for the full amount of this order. That's essentially what a stop loss is. It's a trigger order. It triggers a market order when it hits a certain level. So if you're placing limit, you can put a stop limit order in, which is like you've got a trigger when it triggers, and then you've got your limit. But it's still they still don't execute pre and post outside of regular market hours. So I do recommend placing a stop loss every time and that way you don't have to worry about discipline that way. You've got essentially the market's dictating, the market forces are dictating when you exit. Not a lot moving at the moment. A lot of sideways, quite a bit selling off. Unfortunately, what's selling off is hard to borrow, so there's no selling. Have a look at IPOs. IPOs, yeah, no volume on that one. No volume on that one. Both of those, can't trade them. Russell Index trying to go green again. Nasdaq leading the way, already green. SPY, not quite green, but it's trying. No, I wouldn't say it's gambling, but you are taking more risk. So if you place a stop loss if you take a trade without placing a stop loss, you're relying on yourself to be quick enough to execute an exit order as it pulls back. And quite frankly, in a volatile market, if you're dealing with volatile stocks, which most of the stocks that I trade are volatile, that's why I'm trading them. Dealing with volatile stocks, then if it goes against you, you're going to get a lot more slippage trying to catch it rather than trying to catch a falling knife. You know, you're going to get caught. You're going to get. Get in, get out, Ted. Get green, stay green, get to goal and get out. Greed is the biggest enemy of profitable trading. Federal Reserve downshifts to 0.25%. Central banks' pace of interest rate hikes slows within inflation. I'm quietly confident that the markets will go green by the time the conference, and I'll stream the conference live. I'm quietly confident the markets will go green by the time the conference starts streaming at the bottom of the hour. We've got 20 minutes. Well, you can do it without you can do it without stop losses, but you've got, if you're a scalper, you don't use stop losses because you're in and out. In and out. You're not actually scaling into a position and scaling out of a position. You're just all in, all out. That's what scalpers do. It's take a position, get out of the position. Take a position, get out of the position. Whereas if you're trying to scale into a position, stop losses are a great help. It just helps with your discipline, because there's nothing worse, and you've seen me do it pre-market loads of times, is you end up changing, adjusting your trade plan to accommodate the trade, and that's a losing mentality. You adjust your trade plan to accommodate the trade. You don't do that if you've got a stop loss in place. You've got a stop loss in place, you're more inclined to leave the stop loss there and let the market and let the price action play out. If you get stopped out, you're like, okay, that's my risk, that's why I put the stop loss there. And if it then reverses them and moves back up or goes in your favor, you can always re-enter. Not a problem. I don't know about magic keys, but I've got hotkeys. I think it might be the same thing. I don't know if you're referring to the hotkey. I've got hotkeys, I've got hot buttons, so I don't think your magic keys might be hotkeys. Just different terminology. So basically, I press a key or a combination of keys on my desk on my desktop, and it will do a number. It follows a script that I've programmed it to do. So I've got hotkeys that will enter a position and automatically place a stop loss. It triggers a stop loss at whatever, 10 cents, 20 cents, whatever. It'll trigger a stop loss straight away, or a trailing stop loss. I've got hotkeys that will buy me in at a certain share level, share size. I've got hotkeys that will sell at a certain share size, etc., etc. It is a game changer. It makes things so much easier, so much quicker. If something goes against you, you're able to react a lot quicker with it. The key is to learn how to script, and if you learn the scripting for whichever platform you're on, that's the key, because then you can actually put trigger orders in there, so you can get in, it'll set a stop loss, a range order, or whatever, all these different things, and you can put your range order in, and once it's executed, it will trigger another order, a stop loss, or whatever the scenario may be. How do I manage to control the greed, over trading, and other emotional things that come with trading? By getting burnt too many times. Quite simply, knowing your limits, knowing when, if you're not feeling, I wasn't feeling like trading today, but it was yesterday. I felt lucky. I was going to buy a lottery ticket because I was feeling that lucky, and it came good. Today I wasn't feeling it, but I got green, stayed green, got to goal, and then I just locked my montage. I thought, I'm not risking it. Tried the same with this small account. First trade I took went red, about 10%, just over 10%. So it kind of max loss. But I went in again as it was moving up. Got a little bit back. We're about 10% down on the small account. And quite frankly, I'm not feeling like trading at the moment. So you've got to be right emotionally to do it. So the numbers have dropped. What's happening with the Nasdaq? Well, I'll show you the cues because it's the same thing. It's rallying after the interest rates. So the Fed's the FOMC conference has finished, and we've got the press conference in 15 minutes, which I'll be streaming live. And the interest rates came out 0.25% rate hike, so 0.25%. So we've got the cues are up, back green again. The Russell isn't quite green, just about. Well, it's hovering around the red-green line. The S&P500 is just below. However, the Dow Jones Industrial is holding everything down. So this is why the Dow Jones industrial stocks are why the S&P's not gone green today. So the Dow's down. So the larger stocks that are on the Dow that contribute to the S&P are what's holding the overall market down. But the tech stocks are up slightly. So if you look at tech stocks, the Nasdaq is what we're looking at here. This is the Qs. It's an ETF that represents the Nasdaq, an Invesco ETF, and yeah. So we're moving up, slightly green on the day. We're about 0.25 percentage point up. I'll be streaming the press conference in 15 minutes. Stream that live for you guys. Kind of thinking we might get some movement as a result of this overall market movement. The big movers today. It's still 200% up on the day. It's done nothing but sell off since the open, but it's downwards since the open, but it's still 200% up. I mean, this was 500% up when I traded it pre-market. Yeah, that's the MSGM. Just trying to get move up, trying to get over 35, struggling. QNRX 240 is a key level. MGAM. $360. Get over 360 might be of interest, but the VWAP's up there at 380, 384, 385. Let's see what's happening. Not trading on my main account this evening. Like I say, I'm not feeling it at the moment, so I'll just sit on my hands. Unless something jumps up and says, Tony, I'm too good to miss, I'll just sit on my hands whilst I'm over gold today. We've got any viewers on YouTube? This is very quiet, guys. Well, give me a hell yeah if you can see me on YouTube. Let me know if you are alive. I can check BTB. I can indeed. So Bit Brother, no volume at all. I mean, we're a little over 500,000 shares traded all day. So that's the problem with BTB. I mean, if you hold it, I hope you're not holding bags up at like $8, $9, $10. But if you're holding bags at kind of 250, 260, which is where it was at last week, then it might make a move back up if Bitcoin starts to make a move back up. Otherwise, I don't think I really don't think Bit Brother's going to get back up towards the kind of $8, $9, $10 for a long while now. I don't know if you're in it and still holding bags, or whether you're just interested in it long term. Genius. Hitting the scanners again. Yeah, so personally, I think there's better stocks to trade from a mining point of view, a crypto mining point of view. I think the leader at the moment in terms of the best stocks to trade, I think you can't go wrong with Riot Blockchain or Marathon Digital. Those two are very good mining stocks to trade, two of the better ones. You've got Bit Brother, which is BTB. You've got a number of other mining stocks which are, you know, very hit and miss. BTBT. Ongoing rate hikes are appropriate. That's the breaking news. I've got Bloomberg on in the background. So I don't mind Bloomberg. I actually kind of like catching up with Bloomberg. We're having a losing day on the small account at the moment, so this is the small account. $500 down on the small account. It's the first red trade, first red day so far. That's not to say that we can't pull it back with the right with the right movement. Let me know your thoughts. What are you watching today, guys? Kavana over $12. Thank goodness. Let's have a look at Kavana. Yeah. What's this resistance level here on Kavana? So we're talking. That's a key level. $12 is a key level. That's the last swing high was $12. It's actually $11.90. So we need to hold $12 here. Yeah, well, the markets are moving quite well, up and down. There's some volatility in it. Watch for a continued move up at the bottom of the hour. I don't like trading the markets. I don't like trading much when you've got the FOMC decisions. The volatility is just too much. But good luck with that, Baltazar. Hope it works out for you. I don't know if you're going long or short, but either which way, I hope it goes for you. Well, if you're short, then it's the thing is with the way the markets are moving at the moment. It's I'm not sure. You could be doing all right. I mean, I'm not so sure. You might be getting a double bottom on the green line here. There's a whole confluence at 294 on the Qs, which is the Nasdaq. So we'll see. You know what? I think I'm going to make myself a cup of tea. I'm going to put the conference on. I saw that, Daniel. I'll be back in a couple of seconds, so you wait there and enjoy the press conference if it starts without me.
Good afternoon and welcome. My colleagues and I understand the hardship that high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers.
It is over
And the
350.
labor force participation rate has
You're
changed
right to go
little
short,
from year
Balthazar.
Inflation remains well above our longer run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%.
Every time he speaks, the market crashes.
The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed.
No, it's
to
up at
returning
360s
inflation
now
to
there,
2%
user.
objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5% to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest
Yeah,
sensitive
just be
sectors of the
careful.
economy,
It
particularly
got
housing.
rejected at 370.
It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals, as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum
the spies
employment and
about to
price
pop.
stability goals. Thank you. I look
Markets
forward to your questions.
testing highs again. I hope you managed to take profits there, Balthazar.
Chris Rugaber of Associated Press, thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates.
Nasdaq's gone
The
green
stock
again.
market posted a solid gain in January. Does that make your job
Good man.
combating inflation
Nobody
harder?
goes broke
And
taking
could you see
profits.
lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%.
Playing both
And of course,
sides,
financial
like
conditions
it.
have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial
Oh,
conditions.
can the SPY
And
get
it's our
green for the
judgment that
first
we're
time
not
today?
yet at a sufficiently
Here we
restrictive
go.
policy stance,
S&P
which
500
is why we say
testing
we
that
expect
red
ongoing
green line.
price will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Rachel. Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much
There
the
we go.
unemployment rate would need to go up, if at all, to
Markets
see
have gone
inflation
green.
down to the levels you're looking for?
all but the Dow.
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market.
Good
But I would
man.
also say that disinflationary process
Always look for
you
that
have seen
confirmation.
underway, is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed, demand is shifting back to services, and shortages have been abated. So you see that in the housing services
Oh
sector.
my goodness,
We
MSGN
expect
is
inflation to continue
up
moving
to
up
35, just breaking $35 now.
for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story. The issue is that we have a large sector called non-housing service, core non-housing services, where we don't see disinflation yet. But I would say that so far, what we see is progress, but without any weakening in labor market conditions.
Has your,
Um,
I'm sorry.
Go ahead.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary process now getting underway, and we continue to get strong labor market data. But we'll update those forecasts in March.
Neil.
Hi, Chair Powell, Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could come down and that that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning, job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. We've seen average hourly earnings and now the employment cost index abating a little bit, still off of their highs of 6 months ago and more, but still at levels that are fairly elevated. The job openings number in JOLTS has been quite volatile recently, and I did see that it moved back up this morning. I do think that...
Is it me, or does Powell look like a Vulcan?
Indicator, the ratio, I guess, is back up to
Massive
1.9
pointy ears.
job openings to unemployed people who are looking for work.
Maybe wrong, Jonas.
So it's an indicator, but nonetheless, you're right. We do see wages moving down. If you look across the rest of the labor market, you still see very high payroll job creation, and quits are still at an elevated level. So by many indicators, the job market is still very strong.
Go to Colby and then Howard.
Thank you. Colby Smith with the Financial Times.
Exactly.
Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be, and that's obviously back in December, and the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently restrictive stance of policy to bring inflation back down to 2%. We think we've covered a lot of ground, and financial conditions have certainly tightened. I would say we still think there's work to do there. We haven't made a decision on exactly where that will be.
Oh, there's a bit of a rally coming now in the market.
The incoming data between now and the March meeting.
I'm gonna get to 410.
I don't feel a lot of certainty about where that will be.
SPY
It could certainly be higher than
testing
we're writing
409. That's SPY.
If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the same time, if the data come in,
Nasdaq
in the other
1.3%
direction, we'll
up on the
make
day.
independent decisions at coming meetings, of course.
Just as a quick follow-up, how are you viewing the kind of balance of risk between those 2 options of, the likelihood of maybe falling short of that or going beyond that level?
I guess I would say it this way. I continue to think that it's very difficult to manage the risk.
This is the Fed interest rate
in 6 or 12
hike
months that we
prolific.
actually were close but didn't get the job done, and inflation springs back, and we have to.
FOMC conference decision on rate hikes.
Unanchored.
0.25% hike. The ECB and Bank of England hike theirs tomorrow, but they're likely to follow suit.
But if we feel like we've gone too far, we can certainly and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet.
Every quarter when we get this, we see huge movements in the market, and we're seeing it again today. So we've gone.
Housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other 2 sectors, representing less than 50%, you actually, I think, now have a story that is credible, that's coming together. Although you don't actually see disinflation yet in housing services, but it's in the pipeline, right?
Lucid almost going green on the day.
Sector, we don't see anything.
1162. It's not great volume though, Lucid.
It's very premature to declare victory or to think that we've really got this. We need to see our goal, of course, is
It's,
to bring inflation down. And how do we get that done? There are many, many factors driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process begin in that sector. But so far
Lucid,
we don't see that. And
moving
until
with the
we
market.
do, we see ourselves as having a lot of work left to do.
Should go green shortly. 1165-ish.
And thanks as usual. So I just wanted to connect a couple dots here. The statement made a number of changes that seem to be saying things are getting better. You're saying inflation has eased. That's new. You've taken out references to the war in Ukraine as causing price increases. You've taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing.
So we're breaking highs on SPY again.
Why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
So I guess I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started. We can see that, and we see it really in goods prices so far. Goods prices is a big sector. This is what we thought would happen since the very beginning, and now here it is actually happening, and for the reasons we thought. It's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. This is a good thing. But that's,
We're up at 49.30s. We've got as high as 49.80. So I almost thought we were going to get
housing services.
410.
And that's driven by very different things. And
49.
as I mentioned, with housing services, we expect
49.70s again on the SPY. We're going to break 410 on the SPY.
Will then come down.
NASDAQ,
that new
S&P500, even the Dow Jones Industrial has just gone green on the day.
That's sort of in the pipeline. And we actually see disinflation in the goods sector, and we see it in the pipeline for two sectors that amount to a little less than half. So this is good, and we note that when we say inflation is coming down, this is good. We expect to see that disinflation process will be seen, we hope soon, in the core goods the core services ex-housing sector that I talked about. We don't see it yet. It's 7 or 8 different kinds of services. Not all of them are the same, and we have a sense of what's going on in each of those different subsections. Probably the biggest part of it, probably 60% of that is research would show is sensitive to slack in the economy. And so the labor market will probably be important. Some of the other ones, the labor market's not going to be important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet. And I think we need to see that. It's the majority of the core PCE index, which is the thing that we think is the best predictor of headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we got to be honest with ourselves, we see ourselves as having perhaps more persistent inflation in that sector, which will take longer to get down. And we're just going to have to complete the job. I mean, that's what we're here for.
Nick Timmeros, the Wall Street Journal. Chair Powell, you observed several years ago that we learned we can have a low unemployment rate without above target inflation, and we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is, to ourselves, and the way we understand it is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex-housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, where by an appropriate set of measures are positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
You'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path ahead and the state of the economy, and I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.
Victoria?
Hi, Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its own analysis of any legal constraints?
So your question is, say your question again?
Will the Fed do what Treasury directs as it relates to making payments, or will it do its own analysis of any legal constraints?
So you're really asking about, you're asking about prioritization in effect, is what
Yes,
you're, okay.
yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay all of its obligations when due. And any deviations from that path would be highly risky, and that no one
broke
should assume
410.
that the Fed can protect the economy.
Over 410 on the SPY.
In a timely manner.
Unbelievable.
In terms of our relationship with the Treasury, we are their fiscal agent, and I'm just going to leave it at that.
Are you actively doing any planning of what might happen in the event that would happen?
I'm just going to leave it at that. This is a matter that's to be resolved between, it's really Congress's job to raise the debt ceiling, and I gather there are discussions happening, but they don't involve us. We're not involved in those discussions, so we're the fiscal agent.
Yeah, NASDAQ 100 over 1.6 up at the moment.
Gina Smiley from the New York Times. Thanks for taking our questions. I wonder, was there any discussion today of the possibility of pausing rate increases and then restarting them? Lori Logan from the Federal Reserve Bank of Dallas seemed to suggest that would be a possibility in a recent speech, and I wonder if that view is broadly shared on the committee.
So, the committee, obviously, did not see this as a time to pause. We judged that the appropriate, thing to do at this meeting was to raise the federal funds rate by 25 basis points, and we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. We're gonna write down new forecasts in March, and we'll certainly be looking at the income data as everyone else will.
Sorry, I should have been clear. I mean, would it be possible to take a meeting off, for example, and then resume? Could you, rather than just doing at every meeting a move, go a little bit more slowly, take some gaps in between moves?
I mean, I think this is not something that the committee is thinking about or exploring in any kind of detail. In principle, though, we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and you saw what the Bank of Canada did, and they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the point of deciding right now.
Steve Leisman, CNBC. Mr.
Yeah,
Chair,
seen that.
the S&P has the
Q's up at
PCE inflation rate in
300.
2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%, and you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong, and it's possible to achieve these things without raising rates that high, and also without the surge in unemployment. And Specifically, I wonder if you might comment on the speech given by Vice Chair Lel Brainerd, who said, to the extent that inputs other than wages may be responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the forecast, you're right. If you take very short-term, three month say measures of PCE, core PCE inflation, they're quite low right now. But that's because that's driven by significantly negative readings from goods inflation. Most forecasters would think that the significantly negative readings will be transitory, and that goods inflation will move up fairly soon back up to its longer run trend of something around 0, something like that. So a lot of forecasts would call for core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector that's really not driven by labor markets, wages. So that's why I said there are a number of things that will affect. Take restaurants, right? So clearly labor is important for restaurants, but so are food prices. And transportation services is going to be driven by fuel prices.
Yeah, CRH.
So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view would be that you're not going to have a sustainable return to 2% inflation.
Bit of a pullback right now.
Without a better balance.
Back under 410. Rejected at 410.
I don't know what that will
On the
require
SPY.
in terms of increased unemployment, your question. I do think there are a number of dimensions through which the labor market can soften. And so far we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much a collision between very strong demand and hard supply constraints, not something that you really have seen in prior business cycles. And so now we see goods inflation coming down for the reasons we thought, and we understand why housing inflation will come down. And I think a story will emerge on the non-housing services sector soon enough. But I think there's ongoing disinflation, and we don't yet see weakening in the labor market. So we'll have to see.
Can we get there with 5%?
Certainly possible. Yeah, absolutely, it's possible. It's a question no one really knows. I think it's because this is not like the other business cycles in so many ways. It may well be that that it will take more slowing than we expect, than I expect, to get inflation down 2%. But I don't. That's not my base case. My base case is that the economy can return to 2% inflation without a really significant downturn or a really big increase in unemployment. I think that's a possible outcome. I think many forecasters would say it's not the most likely outcome, but I would say there's a chance of it.
Michael McKee from Bloomberg TV and Radio. I'd like to pick up on what you were just saying about a substantial downturn and ask, with the full weight of your tightening not in place yet, and with the progress against inflation, there's still a lot of talk about very, very slow growth going forward in 2023. And the recession indicators are all suggesting that we are going to see recession this year. So I'm wondering if you've changed your view.
Not sure about GSUN.
View of what
I'll have to have a look in a moment.
the danger to economic growth is going forward, and whether you're very close to perhaps tipping it into the wrong place, which calls for more restraint on your part.
So I do think most forecasts and my own assessment would be that growth will continue, positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors, though, that need to be considered. You will have seen that the global picture is improving a bit, and that will matter for us potentially. The labor market remains very, very strong, and that's job creation, that's wages. As inflation does come down, sentiment will improve. You also, state and local governments are really flush these days with money, and many of them are considering tax cuts or even sending checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction pipeline, both private and public, and so that's going to support economic activity. So I think there's a good chance that those factors will help support positive growth this year, and that's my base case is that there will be positive growth this year.
Rich?
Thank you. Rich Miller from Bloomberg. First of all, how are you doing?
Fine, thanks. Fine.
Good. Second off, I think early on in this conference, you said you need to see substantially more evidence of inflation coming down. Can you give us some idea of what you're thinking of? You mentioned 3 months. We've seen 3 months in a row. Governor Waller has suggested he might want to see 6 months. Is it just the inflation data, or do you have to see the labor market coming back into better balance to have that substantially more evidence?
So I don't think there's going to be a light switch flipped or anything like that. I think it's just an accumulation of evidence. So of course we'll be looking, by the time of the March meeting, we'll have 2 more employment reports, 2 more CPI reports, and we'll be looking at those carefully, as all of us will, and we'll be asking ourselves, what are they telling us? And soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And the one we got, I guess it was yesterday, was constructive. It shows wages coming down, but still at a high level. They're still at a level that's well above where they were before the pandemic. So I don't want to put a number on it in terms of months, but as the accumulated evidence comes in, it's going to be reflected in our assessment of the outlook, and that will be reflected in our policy over time. But I will say, though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. Market participants have a very different job, and it's a fine job. It's a great job. I did that job for years, but in one form or another. But we have to deliver that, and so we are strongly resolved that we will complete this task because we think it has benefits that will support economic activity and benefit the public for many, many years.
Edward.
Thank you, Michelle. Thank you, Fed Chairman, for taking the questions. So you talked about we had solid job growth. Everyone's from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't come down all through 22, and now it's coming down, it's come down pretty fast. So I would say this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down, and Congress did what it did and we did what we did. It's unique. So I think certainty is just not appropriate here. Inflation, it's just harder to forecast inflation. It may come down faster, it may take longer to come down. And our job is to deliver inflation back to target, and we will do that. But I think we're going to be cautious about declaring victory and sending signals that we think that the game is won, because we've got a long way to go. It's the early stages of disinflation, and it's most welcome to be able to say that we are now in disinflation. But that's great. But we just see that it has to spread through the economy, and that it's going to take some time. That's all.
How long do you see then the federal funds rate remaining at this elevated level?
So again, my forecast and that of my colleagues, as you will see from the S&P, and I mean there are many different forecasts, but generally it's a forecast of slower growth, some softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy.
Session 411 now on the spike.
Other people have forecasts with inflation coming down much faster.
301 on the
if that happens,
on the
inflation
Qs.
comes down much faster, then we'll be seeing that, and it will be incorporated into our thinking about policy.
Simon.
Thank you, Chair Powell. Simon Rinovich with The Economist. May I ask a further question about the language around
Over 411.
increases? That, of course, implies at least 2 further rate rises.
It's a good play there, Matt.
Futures pricing, the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence, or do you think if everything breaks right, is that a plausible outcome?
I hope you're profitable at least, Matt.
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger part of that. So again, as I just mentioned, our forecasts, the different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession, and we have inflation moving down. Into the somewhere in the mid 3s or maybe lower than that this year. We'll update that in March, but that's what we thought in December. Markets are past that. They show inflation coming down in some cases much quicker than that. So we'll just have to see. And we have a different view, it's a different forecast really. Given our outlook, I don't see us cutting rates this year if we get our outlook turns true. As I mentioned just now, if we do see inflation coming down much more quickly, that'll play into our policy setting, of course.
Hi, Chair Powell. Scott Horsley from NPR. One of the changes in the statement this month is that the committee is no longer listing public health as among the data points you'll consider in assessing conditions. What should we make of that? Does the Federal Reserve no longer see the pandemic as weighing on the economy?
That's the general sense of it. Look, I personally understand well that code is still out there, but that it's no longer playing an important role in our economy. And we kept that statement in there for quite a while, and I think we knew we would take it out at some point. There's never a perfect time, but we thought that people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in the Fed's monthly or post-meeting statement as an ongoing economic risk, as opposed to a health issue.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Wanted to go back to another thing
Spies
that Fed
testing
Vice Chairman
412.
Warren said recently. She said she doesn't see signs of a wage price spiral. And I'm wondering if you agree with that.
I do. Yeah, I do. You don't see that yet, but the whole point is, once you see it, you have a serious problem. That means that effectively in people's decision making, inflation has become a really salient issue, and once that happens, that's what we can't allow to happen. And so that's why we worry that the longer we're at this, and the longer people are talking about inflation all day long, every day, the more risk of something like that. But no, there's not much. It's more of a risk. It always has been more of a risk than anything else. By the way, I think it's becoming less salient, and people are, we pick that up in conversations, and I've seen some data too that show people are, gradually, they're glad that inflation's coming down. People really don't like inflation, and as we see it coming down, that could also add a boost to economic activity. You look at the sentiment surveys now, and they're very, very low. With 3.5% unemployment and high wage increases nominally by historical standards, why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down,
All profits are good profits, Matty, regardless of how big or small.
So that's what you're looking at most closely is consumer expectations.
That's at the very heart. It's consumers and businesses that are essentially. We believe that expectations of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important. And in this case, I would say the risk 8 months ago or so, longer-term inflation expectations had moved up. We moved quite vigorously last year. Expectations seem to be well anchored, including at the shorter end now, not just the longer end. So it's, and I think that's very reassuring. I think, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very positive thing.
Thank you, Chair Powell. Greg Roth from Market Watch. In the minutes of the December meeting, there was a couple sentences that struck people as important. When the committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder to bring inflation down. I haven't heard you talk much about that today or in the statement, so I was wondering, has that concern eased among members, or is that still something you're concerned about? Thank you.
I would put it this way, it's something that we monitor carefully. Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place. As we've discussed a couple times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I'm not going to try to persuade people to have a different forecast. But our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer. But we'll see.
Go to Brendan for the last question.
Hi, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer faster to that drop-dead debt ceiling deadline. Could it play an effect as we get closer to that drop-dead deadline this summer?
It's very hard to think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen. We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that. We're watching it carefully. We'll just be monitoring it. Thank you very much.
that was as interesting as counting counting sheep. Well, less interesting than counting sheep. Okay, so back at it. So the SPY went all the way over, tested 412. Now the conference is finished. It's pulling back some. So yeah, interesting. An interesting hour. And the rates being pushed out to where we are now. What are your thoughts, guys? It looks like it, doesn't it? It really does. Hopefully, you're absolutely right. I mean, we're certainly in the upwards trend. I mean, if we look at let's go back to the SPY right now. So let's look at the daily market as a result of today. I mean, we did pull back, but we're breaking highs here. I mean, this swing high here back in December was 410.49. We've just blasted past that. We're over that right now. We went up to 410 at the end of November, first of December. So, yeah, I mean, it looks very much like we're getting some bullish momentum. The last time we were higher than this was back in August. So we're swinging higher, which is a good sign. Well, time and patience, that's the story of making money on the markets, isn't it? Right. Who said Golden Sun Education? G-Sun, flying up. Oh, it's not bad spreads either, on a couple of cents. I've seen that when this went up to like $90 last September. I remember the spreads were stupid, so Golden Sun Education is moving up. Confused? Compare the meerkat. News.com. What are you confused about? What are you finding confusing? I'm just now trying to spot something worth trading other than GSUN. Probably take 1,000 shares of this and move up. 1,000 shares maybe. Let's see. So we've got 45 minutes left of the market. I may as well stick around for the rest of Power Hour. I'm here now. May as well stick around, hadn't I? And there is that's what does make sense is that the market. So you're absolutely right. Well, what you're saying there is that the way that the markets are reacting to the fundamental data that's underpinning them is completely illogical. And as I say time and time again, is trade the price action. Don't try and make sense of it all, because the markets can be irrational and illogical longer than you or I can stay solvent. So just trade the price action. Do not worry about the fundamentals and how it should or shouldn't react to those fundamentals. It's sometimes up is down and down is up. You know? Some days I think I've crossed over into the upside down. Yeah, absolutely. Okay, so is there anything moving really nicely? Good volume? Anybody seeing anything? Golden Sun's up there at $3. It's now of interest to me. Well, it would have been of interest to me kind of 250, but I was busy with the this level here with the big volume spikes. Would have been nice. This one. Again, problem with G-Sun is there's just no leverage with it. It's only a $3 stock. So am I going to get 10 cents? There's no point going in if I'm not going to get 10 cents. Taking 1,000 shares, I'm going to get $100 out of it. I'm going to get $50 out of it. I think maybe I am. Go on, I'll give it a whirl. Take a position. We're in at 312. We'll look for 320, 320, 325. Taking 1,000 shares. We tap 320 and we get over it. Don't like the spreads on this. It's rangy. This is the small account, by the way. I'll break that 320 level. Currently down 6 cents. I want to see this breaking the quarter, testing the quarter dollar. Oh, pretty much max size now. Let's see. Range on this 13 cents. Let's give it that. Portfolio size on the small account at the moment is 5,500 now. But, well, it was today. Currently, so we're back down to 5,000 after today, unless we make a profit on this trade. Giving it to 297. So MGAM back up at 360s. Yeah, that's me done for the day. 780 loss on a small account. That's way too much. So I'll knock that on the head and come back tomorrow with that. So that's me locking the montage on the small account, I think. Unless we see something in the next half an hour that's a nice, reliable run up. Problem with the small account is you do have to be very conscious of what you lose. On the larger account, it's not so bad because you're not risking as much percentage-wise. Kind of 15% out there. $5,500 was the starting position, so I've just lost 15% on the day. Today. Excuse me. Don't like this this tune. Maybe something a little bit more upbeat. That'll do. Small account is a margin account. Just wouldn't be able to survive on a cash account. Well, it's a margin account. The stocks that I've been trading, it's as good as a cash account. So not getting any leverage on GSUN. Don't get leverage on anything under $5. So that's a problem with the small account. I'll double check with Interactive to see what their cutoff is. If I might just. I think that was $3 last time I checked, but I'll double check again. Okay, so what else is moving? 786. Let's go back to the main account. It looks better. Makes me feel better when I'm looking at profit. So 6,000 up. So across the two means that we're 53, so it's not a bad day. Yeah, it's not really going anywhere. Back over to VWAP, it really needs to be. MGAM, pretty much about the same movement versus it's just sold off all day. QNRX, that's trying to make it's just sideways. Rapid 7 did. Alright, Rapid 7 is making some big moves. Oh. Just looked at MGM and as I switch it off, it pops. I need to do that more often. I can check Lucid, I absolutely can. So Lucid, it's up at $12 now. So it's it rallied with the market and is continuing to rally with the market. So Lucid Group looking quite strong at the moment. Back green on the day, up 3% from where it was. It's not. I mean, we brought it up last Friday. It went up to nearly $18, $17.50. Strange mutt. That's Lucid. Yeah, I saw that. Kind of back over the V. I wouldn't say flying. It got rejected at $4, but it's back over the VWAP. Remember the VWAP pretty much since the open, and so it got back above the VWAP. It's testing $4 again. But then again, MSGM is making a move up, testing $40. In fact, it's halted. That's why MGAM is moving up. It's moving in sympathy with MSGM, which is halted now. 38.83. Moving up, trying to test $40. What broker am I using? Capital Markets, King. Well, let's look at MGAM. That seems to be testing the $4 level. There's no leverage on this, so I'm not trading it. I'd be all over it if there was leverage. The beauty of volatility, absolutely. You've got to love these volatile markets. When volatility comes in, it's just magic. Kind of mixed results today though. 700 down on the small account, 6,000 up on the main account. American Airlines up $54. Oh, guys, we've got Facebook or Meta got earnings after hours tonight. We've got GlaxoSmithKline, Boston Scientific as well. Earnings today. Who else has got earnings today? Vodafone, I think Amazon. It's quite a lot. There's earnings this evening. Just looking through the earnings, the various earnings that are for this evening. There's quite a lot. Yeah, so we've got Facebook or Meta, that's a big one. T-Mobile. It's tomorrow that we've got Amazon. Tomorrow's the big one. Eli Lilly in the morning, Shell, Honeywell. We've got in the afternoon, we've got Apple, Google, or Alphabet as they like to be called, Amazon, Starbucks. There's a lot after hour. I might actually do a power hour stream tomorrow as a result of that. There's a lot coming out tomorrow evening. Yeah, very nice, very nice. We can deal with these highs. I don't know about 550. It's struggling to hold $4. So 550, I think, is a bit much. It got up to $5 pre-market, but I don't think it's going to. What have we got? 25 minutes to the close. At 550, I think you'd have to be a little bit too ambitious with that one. Maybe we'll get to 450, but not 550. We're not too far off 450. Short up. Make sure you smash that thumbs up button for me whilst I've come back. I'm not sorry for putting up a fight. I've got 3 goals to make up, so I wasn't going to be streaming today, but why not? Still got to record the trade recap videos. Well, I don't know about manipulated, but the volume is irrational. Let's see what happens. I'm going to bounce at the VWAP here. It could be interesting. It literally is following with sympathy with the larger stock, which is MSGM. So this move up, pull back to the VWAP. Watch this. You're probably looking at the same movement with MGAM. Let's see. If we get a bounce here, then will MGAM follow it? Hot mover though, right now, in terms of momentum, versus back over $2. Have a look at CTEX, Chemtrex, the VWAP. It's the volume weighted average price, SC. Essentially, what it means is it's like an exponential moving average, except it's weighted to the volume per time frame. If you're looking at this moment in time, for example, on Chemtrex, the volume weighted average is here, but we've got a lot more volume. See with the volume candles here, a lot more shares traded in this time frame. So the closing price on this candle is a lot more relevant than the closing price on this candle, because there's more shares traded at that price. So that's why the volume weighted average price, you can see that the move up there is a lot more sharper because of the increased volume. It was obviously into a halted gap down, but then moved up again. So the volume weighted average price, VWAP, it's a very powerful intraday trend indicator. It's probably the most powerful trading indicator for day traders, I would say. But very relevant. I wouldn't class myself as a scalper. Now, I did, in terms of number of trades or number of transactions or number of fills, it's all different things there. So yeah, so the markets have moved well today. They really have. But I would say probably taking about 4 or 5 trades a day mostly. I'm averaging a 1 hour hold time per trade. So the length of time I'm actually in a trade is about an hour on average, according to my statistics. Usually take, I'd say about 4 or 5 per day. That might be too many, but I'm an active trader. Let's go back to MGAM. Is it? No, it's pulled back below. What's? Yeah, so it's very similar patterns. Could be the same chart, almost. Versus. Yeah, no. Am I a seller now? I'm not actually in anything to sell. So, am I a sell now? What am I selling? I've not bought. I'm not in a trade right now. So, Tesla breaking highs after it vomited hard this morning. It's now green, not just green on the day, but 6% up on the day, testing 184. Getting back to the levels I was trading it at last year. And again, so I might take 5 trades, but I might take a number of entries on those trades. I might take 5 or 6 entries on those trades. If I take, let's say I take 5 trades, I might have 5 entries per each trade. So that'll be 10 orders per trade. 5 trades. So that'll be like 50 tickets. Of those 50 tickets, I might have multiple fills. So each ticket I might need 2 or 3 fills per ticket. So 50 tickets, and I might have 150 transactions, executions. And when you're getting charged three quid per execution, 3 quid per fill, it mounts up. This is Tesla. Well, Alex, Kramer being right. I mean, even a broken clock is right twice a day. So it does get it right a couple of times a year. Not very often. Alright, let's see what else is moving. So we've got 15 minutes to the close. Let's see what happens. Yeah, so Meta's probably T-Mobile, Meta. Those are Facebook, if you will. Those are probably the ones that I would say that they're the most noteworthy. Today. Let's see what else is. Right, I guess it is what it is. Peloton's still breaking highs. Up there at highs, I should have just left it in on the small account. Yeah, pulled back a couple of times. I've got in at the top both times, so Peloton going to continue making a continuation. I've got 10 minutes left. Discount of 73. What else is moving? Yeah, we're kind of a quiet finish to the day, really. Amtrax, top mover, G-Sun, now over $3, it's $3.15, $3.17, 108% up on the day. Retesting that 320 high. It's got to be careful of the double top if you're in G-Sun. Testing that 320 again, previous rejection level, previous high of day. Yeah, G-Sun, I'll put G-Sun on back on the chart, why not? You can see here we've got a high up here. It's retesting it, 320. Oh, we need it to break that high, otherwise we're going to be in free fall. Break and close above and hold. You don't want the M pattern at this time of day. 10 minutes into the back, 10 minutes to go. Oh, you're not stuck, you're just too stubborn to exit. Right, so let's get the terminology right. You're never stuck in a trade. You just decide not to get out. The only time you're stuck in a trade is when it's halted. Right now, Shuttle Farmer, I don't know where you're saying you're stuck, because, I mean, there's nobody trading this at the moment, at all. If you're stuck up at 10, 12, $15 or what it was back in September, and you've been holding it since, then just write the money off. Just leave it there and let it watch it go to zero. But if you're talking, you're stuck in it at $3, it could get back up there, but highly unlikely. Had a reasonably good day today, but nobody trading it. That's the problem with it. It's just that it's moving on very light volumes. 200,000 shares traded across the whole day, which is like next to nothing. So Shuttle Farmer needs a catalyst. It needs an FBA approval or good clinical trial results or something to bring it, a good newsworthy event to get it moving again. Otherwise, this is going to stick around the kind of 175, 225, 50 cent range around the $2 level. I can't see it doing anything other than that unless it gets a good catalyst. That's just, you're stuck at $7, good luck. You can write that off. It might get back up to $7, but it could be next October. Yeah, it's just dead money right now. So I would either write it off and just leave it there for however much you're in. Write it off, and if it does go back up, then fine, you can get out for break even or a small profit. Otherwise, the likelihood of it going up, particularly on the volumes that it's showing right now, is very. I mean, if you look at this on the daily, let's look at this on the daily. So Shuttle Farmer, it peaked in December up at 330s. Okay. Before that, it went up to, it was up at 120s or whatever it was back in September, yeah. But then it just carried on selling. So if you're stuck in it around $7, see what I mean? The chance, see where I've traded this here. Get rid of these lines. So you can see that the chance of it getting back up there on this level of volume is negligible. The last time it was up at $7 was on this candle here, and you look at how many shares were traded that day. It's like 15 million shares traded. We got 15 million shares traded here, and we only got up to 287. So to get back up to $7, we're talking about something like this. 30 million shares traded, and it needs a good catalyst, and this went up to 340 with 30 million shares traded. It just doesn't have the volume or the liquidity. It just doesn't have the interest to drive the price back up to $7. Sorry. You can ask, but you won't get an answer. This is not a forex channel. Sorry, Calvin. Or Calvin. This is equities. We're only trading the stock market. We're trading stocks and shares. Keeping it real, but we're trading stocks and shares. We don't trade forex. We don't trade futures. We're not trading options. We might talk about them. Same with crypto, but it's just stocks and shares that we're trading. Your best bet with not financial advice. You do what you want to. You do what you want to do. But with Shuttle Farmer, you've got equity tied up in that. You take it out and put it on something that's got a bit of volume and volatility. Don't. And I say this every single day, and I'll say it again for people that are new to the channel and have not heard me say it. Don't get married to these garbage stocks. The stocks you see me trading on a daily basis are garbage. These low flow, low price, volatile stocks, the garbage. They are not stocks to invest in. They're not stocks to swing trade or hold overnight, over a weekend, or any length of time. Get away from the hodl mentality that you know, Wall Street Bets and the other Reddit communities have impinned into you because of AMC and GME and Bed Bath & Beyond. Hodl breaks your bank. You hodl these garbage stocks, you will go broke. Hodl is not a strategy. Hodl is not a strategy. I'll say it a third time. Hodl is not a strategy. It's the best way to go broke. Nobody goes broke taking profits. And these garbage stocks, every single day, you get a new stock that's moving up, and it's moving up well. You get in, you ride the momentum, you get green, you get to your goal, and you get out. You do not hold on to it hoping for the moon. Simple. Okay? It frustrates, and I got attacked on Twitter by the stock Twits people, the Reddit Wall Street 8 community, when I said like just ride the momentum and sell. With AMC, this is going back about 12 months now. I was like, okay, just ride the momentum and sell. Just take profits while it's high now. And this was about I think it was about $36 a share AMC at the time. I said, I'm taking profits right now. And they came after me in droves because I was saying it's never going to go up to $100. They were talking someone was saying $10,000 for a share for AMC, mother of all short squeezing. I said, you're on drugs. It's never going to get up that high. It's like, no, you're ridiculous. But someone was like, a realistic goal is $1,000 a share. No, it's not. It's not even going to go up to $100 a share. Take a reality, swallow a reality pill here. Just get in, take your profits while you can, and get out. Some people had options on AMC, and they held on to them, and they expired worthless. And the kind of monies that they had were life-changing amount of money. They bought in at like $12 and $15 options strike price, and it went up to like 50, I think $56 or $52 or whatever. They were literally, we're talking 6 figures on that trade, options trade, and they didn't cash it in. They thought it was going to go higher. HODL is not a strategy. It will blow up your account. Do not HODL. Get in, get green, get to goal, and get out. Once you're green, stay green. If you're in a stock, don't care how well it's moving. If you're in a stock and it starts pulling back and it gets to your break-even level, either size down or get out. Do not hold thinking it's going to go back to the highs, because the high likelihood is it won't. And if it does, you can always re-enter. It's not a problem to re-enter, but it is a problem if you hodl and it goes to zero. A lot of these companies that I've traded over the last year are not even here now. They've either been acquired or they've gone bust. A lot of them do. Especially these bioscience companies. You get bioscience companies like Quant Therapeutics. I'm not saying that this is a garbage company, but it's crap. So Quant Therapeutics, it moved up huge amounts today. Moved up to 360 from what? Finished yesterday at 167. Moved up to 360 pre-market, 368. It's down at 230 again. This will go back down to like 120, $1.20. But the likelihood of this, it takes one bad trial result, and this ends up a sub-dollar stock, and they get delisted, or they'll get a lawsuit from a medicine that they provide, and have bad side effects, and they'll get a lawsuit, and it'll end up taking the company bust, or they'll get acquired by another company. A lot of these companies just won't be around in 4 or 5 years' time. A lot of these companies are garbage companies. Just don't get married to a stock because it made you money one day. That's my two pennies worth, and that's it. End of the day. So we're finishing on $6,000 up today. So we're at goal on the main account, but unfortunately we've lost about 15% on the what a big red day on the small account today. But to be fair, we've had two trades that went against us today on the small account. It's the first 2 trades that we've had go against us since we started on the 17th of January. It's our first red day. I keep saying red days are inevitable. As a trader, you've got to get used to being wrong, because invariably you will be wrong on a regular basis. So get used to it. Just remember to cut your losses before they become big and before they become crippling. Okay, I think I'll be back at it tomorrow. Again, I'll be same place, same time. If you're wondering what time that is, it's 8:30 a.m. I'll be starting the last hour, or trading live the last hour of the pre-market session. I'll be trading for 90 minutes after the market opens as well, so 2.5 hours in total. come join me then. I will be dropping a couple of trade recaps, one for the small account, one for the main account, within the next hour or so. I've got to record them, I've got to edit the videos and stuff, so that'll take me a little while to get that done. In the meantime, that'll all be dropped on YouTube. If you're not subscribed to the YouTube channel already, get over there and get subscribed. What the hell are you doing? And if you are subscribed, hit that notification bell so you're not waiting around. You'll get notified when I drop those videos, and also when I go live tomorrow morning again. So come back tomorrow, we'll do it all over again, and hopefully we'll have just as good a day, if not better, than that we've had today. Another day like we had yesterday would be great. So another day like last Friday will be phenomenal. But I'll see you tomorrow, guys. Take it easy, enjoy your evening.